Folks, by the end of today's video, you will discover 5 AI stocks that are mostly all trading at under $10 a share that are poised for massive runs and certainly massive trading opportunities. Several of the stocks in this video are trading at under their net asset value, have been benefiting or will benefit most likely from the AI boom, have an upcoming catalyst, have previous patterns of spikeability, or have another convincing reason that they are due for some lovely breakouts. But as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. A lot of people, they get real risky, but they don't do their frisky, and vice versa. In order to be successful in this market, you got to have your own due diligence. We're here to provide you with trade ideas and potential strategies, but it's only to get you started on your research. And always remember, this is a trading channel, which means that we're looking at this from a perspective of how can I make money, not how can I buy and hold this morally for 25 years so that I can feel good about myself, and at the end of the day, probably end up losing my money anyways. If you are somebody that does not like risk management, wants to just YOLO into random stocks and then buy and hold them forever, this is not going to be the channel for you. No, no, no. But if you are somebody that looks at all stocks with a trading mentality, which says, what can I take out of that stock? Then this is probably going to be a great channel for you. Anyways, I'm going to go ahead and put the timestamps down below, and if you saw value in this video, make sure to hit that ravishing like button and subscribe. Okay, number 1, OBLG. OBLG is a very unique AI play and is a stock trading at about 153 as I'm shooting this video that has had 5+ massive spiking periods from similar levels to where we are at now. Some of these periods of wonderful spikeability saw the stock run hundreds of percentage points. We like to see that because we know that if this has happened in the past, well, it's probably much more likely to happen again. Markets have a very, very good memory, especially because you can just look up the chart and be like, hey, yeah, that's what happened last time. Look, it's starting to go up again. What do you think is going to happen this time? Now, this stock may be considered a bit of an untraditional AI play in that it's technically in the video conferencing space where they essentially have products that allow real-time collaboration and immersive group chat experiences on an enterprise scale. Their software provides huge leveraging opportunities to integrate next-level AI to their already very diverse clientele base and whatever future clients they manage to grab. You look up their customers, they work with companies like BlackRock, Ford, IBM, Fujitsu, Holder, Siemens, DoD, Schrumberger, Securities, and Under Armour. Having this relationship already built in with a ton of different customers makes it a lot easier to roll out a very aggressive AI apparatus and provide next level technology to them, which then can help bring in more and more customers. You pull up their financials for quarter ending March 31st, 2023. They reported $3.714 million in cash, total assets at $6.338 million, liabilities at $2.436 million, which puts you at a net asset value of about $3.9 million. So from where we're trading at right now, OBLG is at $3.84 million in market cap, which means what? Well, it means that you are buying the company, if you're buying it at this price, for less than its literal net asset value. Not much less, but a little bit less than its net asset value. So the question that investors and or you as a trader have to ask, is this company worth only what its stripped down net asset value is worth? Or are its present track record, customers, and current business strategy and its leveraging capabilities, do those justify a premium over the stripped asset price? That's a question that you have to ask, and my view is yes, especially on a rolling basis, and markets have acknowledged that time and time again in the past. Now, what is the catch though, Charlito? Because we just want a rallyto to grow our walitos, and if it dumpitos, then that's not going to happen. Well, the one catch that I see here is that they do have warrants outstanding at an exercise price of about 171, and that is a problem because warrants, if exercised, give more shares to warrant holders, which is kind of like growing the float, so to speak, and is like a mini offering. However, it is worth mentioning that this isn't anything new, and they've had warrants outstanding for most of their history. The key with this is just having extra tight risk management, having a clear stop loss, something that's not going to have you losing the boat and the house and the 3 kids if it starts dropping dramatically. We can look at this previous history and say, hey, you know what? We've had huge boomitos, but what happens after the boomitos? Well, dumpitos. A lot of people look at that and they'll say, you know what? I don't like the dumpito part, so I don't want to take part in the rallyto part. And that is totally fine, right? But at the end of the day, you have to decide for yourself what kind of risk management is appropriate and what kind of risk tolerance is appropriate. Some of the other stocks we're going to be talking about on this video have more solid, slow uptrends. Others have a lot faster uptrends. So different strokes for different folks. You got to target the stock and the setup that is most appropriate for your own trading goals and tolerance level. Now, before we move on, it's time for a word from our sponsor, Moomoo. Today's video is sponsored by Moomoo and the now up to 17 free stocks, yes, 17 free stocks that you can get if you sign up and deposit a small amount using our link down below. Let's be real, folks. The stock market is fast and always changing. It's changing rapidly. So you need a very, very reliable broker that has your back. Has your back with reliable executions, speedy information, and helps you identify the most exciting opportunities. And Moomoo offers all of that. For example, with Moomoo, you can watch what the big money is doing behind the scenes and get insights on what areas of the market may pop up next. If institutions are, for example, investing heavily in a particular area, that might mean that, hey, you maybe want to watch that area. And Moomoo can help you identify that area. In fact, I use this all the time to prepare. Take this year's AI revolution, for example, which is the topic of this video. Well, just 20 firms, mainly AI stocks, have popped up huge this year, driving the overall market to massive gains. And using Moomoo, you'd find that the overall institutional shareholding percentage of many of these companies is over 50%. And what if you want to find other AI plays? Well, Moomoo also has an incredible amount of other ways that you can scan for these plays. You could search by sector, type of computing, computing power, and so on and so forth. In fact, Moomoo Stock Screener overall is quite incredible. You got to try it for yourself. Search for what big money players like Warren Buffett are doing with just one click, and it will automatically screen out the lists of stocks that meet Buffett's stock selection criteria. All of these resources are here to make you into a better trader. And again, they are offering you up to 17 free stocks to take advantage of this. This includes an add-on stock of AI when you take advantage of this promotion before June 30th, which is just around the corner. So make sure to do this as soon as possible. You're not going to regret it. Anyways, thank you again, Moomoo, for the sponsorship. Now back to the content. Okay, number 2, POAI. POAI is predictive oncology and is trading at roughly $3.75 a share. It's had previous periods of massive spikeability throughout the last 6 months and has been attempting to build off lows since hitting them at the end of April. I see long-term support at lows at 247 and effective support at lows at 306. Now, I see momentum as picking up consistently from those levels, which is very, very important because it's priming it to go higher. And as it breaks above that red directional SMA line, you need to take note. The stock had a nice dip today, going down about 15%, which means now it's primed to show either proof of concept that it's headed higher or signal to the markets that it's over. If this can hold some of its previous rally, that means that it's showing a level of retention that then it's going to be much easier to build off of and can lead to an acceleration cycle of the overall momentum, which is something that we gotta see as traders, something that we love to see, something that our eyes water and our mouths drool over. Just make sure to get a napkin though, because drooling is gross. If this gets just halfway to previous spike highs at 1822, you're looking at about $9 a share, and that's 142% of upside from the current price. 142% of potential upside and 18.6% of downside potential to support. That's not too bad from a risk versus reward standpoint. But Charlie, what is the logic of taking half of the previous rally's highs as resistance instead of the actual highs or the previous highs at 1345 or 1179? Well, remember, these stocks are super low float and they tend to have big liquidity crunches when they have momentum in them. When lots of people are chasing that small little float, they tend to have these insane pop-offs, which may not be super realistic or easy to execute in and out of. So you have to be a little bit careful, because even though you may ride that and you may see the percentage gain in your account go 100, 200, 300%, well, that doesn't mean that you're going to be able to sell out fast enough. So when the rest of the market is using those high resistance levels, you want to have a lower, more easy to grasp and execute in and out of resistance. And to me, when you're looking at a run like this, half is just a good general guideline. Ideally, though, you'd see a run to 9, and then at that point, you'd see something resembling the overall trend of one of these. These were great because this push and pull momentum provides really, really easy trading. You pull up their market cap, you're looking at 15.14 million in market cap. You look at their balance sheet as of close March 31st, 2023, they've got about 18.597 million in cash. They've got 25.06 million in total assets, and they've got just 6.507 million in total liabilities. You do the math on that, and you're looking at roughly 18.554 million in net assets. So here, once again, you're trading a few million below the net asset value, which I like to call the stripped asset value, which isn't completely correct because sometimes when you sell assets on the market, you're going to get a lower price, but I like to consider it as the stripped asset value, the net asset value, what the actual assets without the company are worth. What does this company actually do, Mr. Charlie? Well, the company has a vast repository of over 150,000 tumors by cancer type, and it's using the emerging AI technology to develop therapeutics with greater precision and efficiency. They recently revealed that they would be launching an in-house drug repurposing platform specifically targeted at improving outcomes for ovarian cancers. This platform seeks to provide more accurate, more personalized solutions to patients to hopefully improve their outcomes. And I think net and in effect, this is a very, very unique biotech/AI play. And I'm looking forward to seeing more potential spikes in the future. Okay, number 3, AMST. So AMST, if you recall, was a top idea we had back in May, and it's followed this overall pump and dump uptrend, and it's now cooled off and looks primed to have yet another one of its famous periods of spikeability. The stock is trading at 387, and I see the upward trending support being at about 368. It's had a number of 50 to 70% rallies of spikeability during this overall uptrend, and if you look at some of the previous periods of insane buying pressure, you saw some that had 2 to 3x runs. Imagine you buy a stock and then it 2x's or 3x's. That's a lot of fun. I'm not going home with regular tears in my eyes, I'm going home with champagne tears. I don't even like champagne that much. Part of the reason this has had so many runs in the past is because the float on the stock is only about 1.75 million and the market cap is low and the short interest is almost 9%, which can drive a lot of liquidity squeezes as prices go up. But of course, it's also the fact that we're in an AI year and AMST is in the AI space. And folks, like I said earlier, markets have a very, very good memory. And AMST has broken out many, many times in the past, and the overall AI trend is still as hot as ever, if not hotter. And so now that we're in a period of time where the stock has consolidated, well, I'd argue it's only a matter of time before the stock wakes up again. And the next spike following this overall uptrend should take us a fair amount above $5.95, maybe even into the $6 region. And remember, this is an AI company that has worked with higher education institutions, esteemed businesses, and museums. They've also managed to set themselves deep into the ChatGPT world, offering services that help its customers learn to integrate ChatGPT. So I believe that this play is relevant as ever. Okay, number 4, APLD, Applied Digital. They built next-gen data centers across North America, which provide substantial computing power to high-power computing applications, such as blockchain infrastructure and the lovely artificial intelligence. Now, this is one of the only stocks on the list that I'd have to put out with a do not chase warning. It's already at a newer and newer cycle high, and what happens after newer and newer cycle highs? Well, it gets overbought, and then boom, you get a period of overselling. However, this is a stock that at the next dip, you'd want to take very, very seriously, and I think you would be a fool not to. Previous pushback support is at around $7.81 a share, and if you can scout out entries around there and have a tight stop loss, it's probably not going to do you much harm. But ideally, you'd see this push back to older resistance, which of course becomes new support, and that's at about 572. At that point, if you see it bottoming, holding that very, very clearly, and then building off it, I think you'd be primed for a very, very good trade. To me, overall, it seems like the stock is in an overall early discovery phase where people are just kind of finding out about it. It had a very, very bad 12 to 18 previous months because of the overall Fed tightening cycle. But now that people are acknowledging AI and the massive amount of computing power that it takes to actually power AI software, well, this stock should be primed for more and more discovery. Of course, huge pushbacks on the way, which we love pushbacks because that means better entry prices. But overall, and they have been making aggressive moves. Last month, one of their major subsidiaries, Psy Computing, signed its first major AI customer with an agreement worth up to $180 million over a 24-month period. And this includes significant prepayment. The CEO said, "The amount of demand we are seeing from emerging applications for these high-power computing solutions is unprecedented and likely the tip of the iceberg." I like what I'm hearing there, folks, and I think you will too. Again, though, we want to push back. I think this can go a lot further than the current price, but it's going to have a big pushback, and at that price, that's when all of a sudden you're like, hey, maybe I should be scouting out some entrants. They went from reporting about $1 million in revenue for the quarter ending February 28, 2022 to $14 million a year later of the same corresponding quarter. And if you compare year over year from the 9-month period, well, it's almost a 33x, going from $1 million in revenue to $33.3 million in revenue. How many companies are doing a 33x year over year? Let me answer that question. Not many. And so when you're thinking about that and you're thinking about, hey, well, this is also an AI stock, well, to me, it seems like it's going to have a lot more to run. You just got to make sure that it has a good debito cycle. Now, lastly, I want to end this video with C3AI, ticker symbol AI. Ticker symbol AI has an analyst event tomorrow, and I believe it's one of the best short squeeze candidates in the market currently. In fact, I would be shocked if ticker symbol AI, which is one of the purest play AI plays anywhere in the market, while at the same time being one of the most shorted, doesn't see some level of massive breakout again in its future. You look at the short interest situation from the lovely Ortex, I mean, short sellers just attacked and brutalized the stock at much lower prices and stayed resilient, paying short borrow fees that are going through the roof for many, many, many months. And now that the price of the stock has gone up so much, they still have to pay insane borrow fees. And it just doesn't look like AI, the AI trend or AI stock is going to be cooling off massively anytime soon, where they're going to be in the green. So that means if the stock continues going up, or if it just continues staying high up for the next few weeks, the next few months especially, well, you're going to see periods of time where short sellers are like, you know what, we're going to have to start covering, which means buying back shares, which means means more potential boomitas. And if you're being technical about it, I mean, markets remember that AI at near euphoria highs near IPO was able to get to 183. This current AI cycle may not have the same hype that you saw in 2021 for overall growth and just liquidity everywhere, but if it's just half that way or a quarter that way, that is a lot of pain and headache for short sellers that have already been really backed into a corner on the stock. So I would say AI deserves to be on your radar, especially before tomorrow, because you do have that analyst event. Anyways, folks, these are the top 5 AI stocks that we think you should put on your radar as soon as possible. If you have others to add, or you want some feedback, or you have an opinion on any of these stocks, make sure to go ahead and comment that down below. And of course, as always, make sure to do your own due diligence on all trade ideas presented here on the channel. We are a research company, a publishing company that publishes research, and it is your job to take that research and say, hey, do I agree with that or do I not? And I do want to end this video by reminding you that we do have a strict disclosure requirement when it comes to the small caps that we cover. The fact of the matter is that we cover a lot of small caps with super low floats, and it doesn't take much to move them. So unlike the short sellers or Wall Street that put out negative press releases or positive press releases to simply benefit their own positions, well, at ZipTrader, we don't do that. We do not have positions in any of the stocks that we talked about in today's video. We believe that's important to build a long-term relationship with our audience and to build a name for ourselves in this niche. Anyways, folks, I hope that you found value in this video. Make sure to hit that ravishing like button and subscribe, and we will see you in the next one.